Good evening, ladies and gentlemen. On behalf of LOBA, it gives me great pleasure to welcome you all to the 11th Career Guidance Session, Introduction to the World of Finance. My name is Anish Mathew. I am the moderator for the session today evening. I passed out of Loyola in 1981 after spending 7 glorious years with the school. I have over 30 years of experience in the financial services industry, mostly as an equity fund manager. I am currently based in Singapore, having been here for the last 20 plus years. My fellow moderator for today is Gautham. I would like to introduce him. Gautham, please introduce yourself.
Hi everyone, my name is Gautham Shiv Sankar and I'm a student of class 11 commerce stream and I've been in Loyola since UKG and I'm just grateful to everyone for giving me the opportunity to facilitate this program. And while we're on the topic of this year's commerce stream, Anishata, I have a question for you. Uh, this year we are studying about accountancy but not about finance. It would be great if you could briefly tell the difference between the two.
Great, Gautam. That's a very relevant question because most people use accountancy and finance interchangeably. The difference is accountancy is all about recording and reporting of financial information. So basically, it covers things like posting journal entries, creating a trial balance, creating a profit and loss account, a balance sheet, and cash flows. So what these gives the financial snapshot of a company at any given point in time. Finance is different. It's a much broader art. It is about analyzing these financial statements and making the relevant decisions. It is about figuring out for an individual or a company how they generate capital and how they use it. For example, if you're running a company and from a finance point of view, what you would be doing is figuring out whether the company has enough cash to meet the upcoming expenses. And if the company does not have enough cash, then you would be figuring out how best to borrow in an effective manner so that you don't default on your cash commitments. Similarly, if you have excess cash, it's about how you will deploy that excess cash in safe investments so that you invest it optimally without taking undue risk. So that is the key difference between accountancy and finance. Finance is a very vast field, as you know. They say that it is money that makes the world go round. Financial services industry globally is something like a $22 trillion economy. That is nearly 7 times India's economy. So you can imagine how vast the field of finance is, and it is growing annually at a rate of something like 9%. So what we are going to do in today's session is to cover some basic aspects of finance. Binoy, can I request you to put up the slide? So the key areas of finance that we would be covering is corporate finance through the eyes of investment banking, investments, both in traditional asset classes with focus on listed equities, in alternate asset classes with focus on private equity, banking, and the disruption that is happening in the financial industry through fintech. We'll also touch upon education, whether doing a chartered accountancy or an MBA, how does that further your career in finance? We'll touch upon some of the lovely experiences we had in Loyola, which has stood us in good stead in our careers. We'll talk about the relevance of place of work, how important it is to work, say, in a financial center like Bombay or Mumbai, as they call it now, or in one of the international financial centers like Singapore. Finally, we will hand out some useful tips which we feel would be important for you or will help you in if you are interested in following a career in finance. And then we'll handle the questions that you may have for us. I must inform you that please give us your questions, send us your questions using the chat box, even as we are speaking. And today we have put together a panel of experts, really high quality industry experts, all of whom are battle hardened veterans who have been there, seen that, and done that, and survived to tell the tale. So, this is a very unique session. It is up to you to make the most out of it. So, without much further delay, I would like to introduce our panel of experts, starting with Sundar.
Hi, good evening, everyone. This is Sundar here. I passed out of Loyola in '96 ISC batch. Was there for 13 years, and then went on to do my undergraduation in BITS Pilani, and then my MBA from XLR. As it's not hard to sort of imagine. I mean, as I was sort of passing out of school, I probably had really no idea in terms of what I wanted to do. I mean, investment banking was probably not something which I was even aware of at that stage. And it's not uncommon, right? I mean, a lot of these things become clearer to you as you sort of do your undergraduation, and then if you end up doing an MBA, that's when a lot of clarity will sort of emerge. And today, along with the panelists, we'll talk through some of the experiences. But in terms of my work experience, I started with SBI Caps, had a couple of job shifts, then moved into Kotak Investment Banking, and then spent 13 years at Morgan Stanley, where I spent time leading the mergers and acquisition division for them in India. And then last year decided to do something entrepreneurial. So that's a brief, and I will speak to you.
Lovely, Sundar. Srini?
Hi, good evening, everyone. It's a pleasure to meet all of you virtually. I'm from the 1981 ICSE batch of Loyola. I was both a day scholar and a boarder through my 6 years at Loyola. Subsequently, I did my chartered accountancy. I've spent about 30 plus years in financial services, including 25 years in the private equity investing business and a couple of years in the IT services industry. So my interest in finance as a career really came in after my pre-degree. At school, my favorite subject that spurred my interest was economics, besides sort of English and history. Apart from that, at school, I was the Lens editor as well, which I hugely enjoyed. I presently live in Delhi with my family, with my wife and 2 children. I manage a private equity firm called Jacob Ballast Capital. Back to you, Anish.
Yeah, great, Srini. Shekhar?
Yeah. Good evening, everybody. Thank you, Anish. It's a pleasure and privilege to be here today with all of you. So very briefly, I am also from the 1981 batch, like Anish and Srini. Passed out of the ICSE batch and then went on to do my degree in engineering and then at my MBA, specializing in marketing and finance. I actually started my career in the FMCG sector as a marketer in sales and marketing. I spent a few years there. Also had a brief stint as an entrepreneur, and then moved into the world of finance about 25 years back, where I have been done different roles in product management, marketing, sales, strategy, risk, and so on. I work in the Middle East. Most of my financial experience has been in the Middle East. And I continue to operate out of here. So pleasure to be here. Thank you.
Thanks, Shekhar. And last but certainly not the least, Sagar.
Hello, everyone. This is Vidyasagar, 98 ISE batch. It's a pleasure to be here. 13 years in Loyola means Loyolite for life. Currently based in Singapore with my family, my wife and daughter. Also have the opportunity to be the head of product focusing on fintech software products at a startup which is backed by TVS Group, an $8 billion conglomerate, as you may know. What we do is we create software products for financial institutions along the lines of digital payments, lending, microinsurance, and so on. Overall, 15 plus years of experience, out of which a decade plus spent in financial services and tech. Started as a software developer with Infosys. There was no plan then to move to finance, but then chanced upon multiple opportunities and moved to fintech after working as a digital strategy and transformation expert for the firms such as Citi, Deutsche, and UBS. So fortunately, this journey has taken me to different locations as well. Been living and working out of USA, UK, and now presently in Singapore. Educational background, I'm a computer science engineer and hold an MBA from INSEAD. And very delighted to be here and provide some of the perspectives through this session and with my esteemed panelists as well. Back to you, Anish.
Yeah, fantastic. So since we're short of time, let us dive into the main session. We'll start off with Sundar talking about investment banking.
Thanks, Anish. So, I'll try to give you all a brief on investment banking. If it's not very familiar to you, don't worry about it. As I said earlier, when I was sort of graduating from school, I also had no idea. Let me try to explain it. I think most of us are pretty familiar with the traditional banking, which is, people make deposits, people take loans, which is the role of the normal banks. Investment banks are effectively an extrapolation of that, except that unlike a traditional bank, which takes deposits and lends out money, the role here is predominantly of advisory in nature. So you are helping companies raise capital, could be in the form of initial public offerings. You're helping companies acquire other companies, merge with other companies, etc. And we will talk about each of these roles in a little bit of detail. Or it could be an equity research analyst. So to give you some context, maybe I'll sort of talk through some of the recent examples and sort of give you a flavor of what the work really entails, right? There are three broad buckets of roles an investment banker could do. There are more, but I'm sort of listing the key ones. The first one is of an M&A advisor or a mergers and acquisition advisor. Here, the role is really helping companies either buy other companies or maybe divest themselves or sell a part or a division. Let's think through an example, right? Most of you are probably familiar with Flipkart. A few years back, Walmart had acquired Flipkart, right? So the role here is to either help Walmart or Flipkart, and typically there is an advisor on each of these sides, to either buy the company or sell the company. Now, the question is, why do companies do this, right? From a Walmart perspective, they're a large retailer, but they didn't have a presence in India. They didn't have a meaningful presence on e-commerce, so it sort of helped fit them, and that's what sort of spurred them. That's the role of a M&A advisor, where you're sort of helping companies buy or sell. If you were to sort of look at the other role, which is of a capital market advisor, which is helping companies raise capital, right? The most common form, which most of you may be familiar with, is IPOs. Over the last year, you probably read about a lot of IPOs such as Zomato, Nike, Paytm, etc. The role here of an investment banker is to actually help these companies sort of raise the capital. So you sort of help position it, go out and talk to investors like Anish and Srini, etc., who will sort of talk about how they evaluate these investments. So you go help these companies actually raise the capital. Now, the IPOs are the most common form which you sort of hear about, but it could also be a private company which is looking to raise capital. I mean, last year you probably would have read, I mean, more than 40 companies privately held with over $1 billion of valuation. So you help the company sort of raise this capital. And again, I mean, it doesn't have to necessarily be in India. Sometimes some companies go ahead, raise capital abroad. You have companies like Make My Trip or Freshworks, which have raised capital abroad. So that's really the role of a capital market specialist. The third one is of an equity research analyst, which is, I mean, let's say, I mean, for example, someone like a layman is interested in trying to figure out, okay, I have a Zomato stock which is listed. Do you think I should sort of go and buy that stock, right? As a layman, your level of understanding of the company, the valuations, etc., might be limited, which is where an equity research analyst comes out with reports saying what they think about the performance of the company. Do they expect the share price to go up, remain steady, or is it overvalued, etc.? So that's really what an equity research analyst does. So that's the broad bucket of the roles which it entails. So now, I mean, if you were to sort of think about it, I mean, what are these, or who are these investment banks? Right? I mean, typically, I mean, you can sort of bucket it into two. One is the global banks, which are the likes of Morgan Stanley or Goldman Sachs or a JP Morgan, who have a global network. And you also have a host of domestic banks like Kotak, JM Financial, or an Aventus. I mean, each of them bring their own strengths, capabilities with them. And typically, you would see in a transaction a combination of a domestic or a global bank. So that's sort of pretty common. The other thing which I sort of people tend to often ask me is, I mean, what does one need to do to sort of get into investment banking? What is the career path, right? Now, the way I would sort of characterize it is, I mean, this is something where, I mean, people from multiple avenues have joined. So, I mean, my background is I'm an engineer, then did my MBA, and then went into investment banking. A lot of my colleagues have done BCom or CA and then have sort of got into investment banking. You also have undergraduates fresh from engineering colleges who have joined into investment bank and sort of grown. So you would see, I mean, a career, the people sort of panning across each of these things. Another question which people have always asked me is, I mean, having done engineering, I mean, you're moved into finance, does it mean your engineering career has been sort of wasted? Again, absolutely not the case. I mean, whatever we learn is going to be sort of fully used, and the starting point of that is from Loyola. What I can tell you is what we learn in Loyola through the courses, through the various youth festivals, sports day. I mean, you are getting exposure to such a formidable set of peers and teachers, which is really going to hold you in good stealth as you sort of go forward. So whatever you're doing, I mean, it's going to sort of help you. So, I mean, I'll pause now and we will sort of come back again and take questions, but back to you, Anish.
Sure, thanks. That's a lovely overview of investment banking. So I will take over now and talk about investing in traditional assets, specifically about investing in equities. Binoy, can I have this slide up, please? So what do you mean by traditional asset classes? Basically, these stand for investments in listed stocks. Stocks are nothing but companies which are listed on various stock exchanges around the world. It also stands for investment in fixed income. Fixed income is nothing but debt which is raised by governments or public companies or any corporate for that matter. And the third bucket of traditional asset class is money market instruments. These are short-term debt. Typically, they are less than 1 year in tenor. So these are short-term fixed income securities. So what I'm going to talk about is what the equity fund manager does. So what the job entails as an equity fund manager is to create and manage a portfolio of listed companies. Now, the crux of the matter is, how are you going to create this portfolio? There are a few things you have to look at. First and foremost is your investment guidelines. Every fund or every mandate that is being managed has its set of investment guidelines. Just to give an example, I run a mid and small cap India equity fund currently. So the investment guidelines for that fund states that firstly, I can invest only in India listed companies. The second guideline says that at least 80% of my investment have to be in the mid and small cap category. Another key guideline says that a single investment in a stock cannot exceed 10% of your portfolio. And there is another guideline which says that at any point, you cannot hold cash more than 30% of your portfolio. So when I create a portfolio, I have to keep in mind all these guidelines and make sure that when I continue to manage it, I don't bust any of these guidelines. The other important factor that I would consider while creating the portfolio is the investment objective. Typically, the investment objective is to outperform a benchmark, which is normally an index. So for the India fund that I manage, the benchmark is the index called the MSCI India Index. So last year in 2021, my fund went up by some 33% in US dollar terms. Now that is very good on an absolute basis. But what is important is to figure out how much did the benchmark move up by, and has the fund outperformed the benchmark. So thankfully, MSCI India went up only by 29%. So I outperformed the benchmark, and that is why I have a job this year. Just joking. But that is the other important thing that one has to take into account while managing a portfolio. So once you have taken this into account, how do you actually select the stocks for the portfolio? You can do it in a number of ways. Typically, you can do it via fundamental analysis or a quant analysis or technical analysis. Fundamental analysis stands for analyzing the financials and the fundamentals of the company, the industry it operates in, the strengths and weaknesses of the business model, the strength of the management team, etc. Quant analysis is running a quant screen based on a number of parameters. It can be either financial parameters, or it can be parameters such as liquidity of the stock, or it can be a parameter such as the holding of management, the shareholding in the company. And technical analysis is nothing but charting, studying charts and figuring out, whether the chart looks strong or weak, and hence whether to buy or sell the stock. So for myself, I typically use a combination of all three while creating my portfolio. So that is what a typical job of an equity fund manager is. So what are the opportunities, or how do you get into being an equity fund manager? If you look at an investment firm or a mutual fund, it can be split into frontline jobs and non-frontline jobs. Frontline jobs are typically in fund management, where you normally start off as being an analyst. Here, the job of the analyst is you're given certain sectors to cover. For example, when you start off, you may be given the pharma sector or a banking sector to cover. And the analyst has to pick or analyze the stocks within that sector and pick the best of the stocks out of them and recommend that to the fund manager. Now, I've already covered what the job of the fund manager is. The third job which is there in fund management is that of a dealer. This is nothing but execution of the orders on a day-to-day basis. This is an important function because the dealers can add value. They can execute at much better than market rates and hence, add value to your fund. Another frontline job, which is a very important job, is fundraising, or what is typically called business development. See, performance is okay, but what is critical for running the fund management company or ensuring its survival is to raise money from investors. And this is a very important job aspect. And if you look at most of the CEOs of fund management companies, they come from this background. They typically have been business development guys before they became CEOs. Amongst the non-frontline jobs, the one which is really coming into prominence is the compliance job. This is because, as you can read everywhere, the regulations are tightening, regulations are increasing and becoming more and more complicated. So a compliance officer in a fund management company, the role becomes more and more important. So these are the typical jobs, which one can target for in the fund management company. What I left out is, the progression. If you start off, say, as an analyst, if you're a good analyst, over time, you will get promoted to becoming a fund manager. So typically, all of us, I also started off as an analyst, and then over time, I became a fund manager. So that is a typical progression you see within a fund management company. Now, what are the skill sets which are required? Obviously, you need to have a base level knowledge. But what is more important is, I would highlight, is the ability to deal with the unknown. What do I mean by that? Basically, as an equity fund manager, you're taking decisions based on your assumptions and forecasts on how the company is going to do, how the industry is going to do, etc. There are a lot of moving parts, and hence you are never really in control of all the facts before you take the decision. So your mental makeup must be such that you are able to take decisions with having only partial information. If you are somebody who wants to have all the facts in front of you before you take a decision, then probably this industry will put you under a lot of stress. The other factor is, as we have all heard, what can go wrong will always go wrong. So one year your portfolio may be doing very well, another year it may get blasted out of the water. I'll just tell you about my own experience in the last 2 years. I told you last year my portfolio was up 33%, which was very good. But in March 2020, just in a single month, my portfolio went down 30%. You can imagine, almost 1/3 of my portfolio got wiped out when COVID broke out into the world scene. So, you have to have build a certain amount of resilience. Things will go wrong and it will always keep on going wrong from time to time. You have to have the mental makeup to pick up the pieces and deal with it and move forward. Why am I so bullish about the fund management industry? Particularly in India, it's very underpenetrated. The total assets under management in the fund management industry is only 15% of GDP compared to the global average of 63%. And what are the key threats? See, as markets become more and more efficient, it becomes very difficult to beat the benchmark or the index. If you look at US, for example, in any given year, only about 30% of the fund managers beat the index. So what is happening as a result is more and more people and more large investors are investing in funds which their only role is to sort of perform in line with the benchmark or the index. So this is known as passive investing. And this is already accounting for about 60 to 70% of the inflows globally. And it's only a matter of time before it starts to come about in India too. So that is what I wanted to talk to you about investing in traditional assets. Now over to Srini for his thoughts on investing in private equity.
Thank you, Anish. So I will start by saying that alternative investing is in contrast to what Anish mentioned. To put it very simply, if you own shares of Apple or you own shares of Infosys, and if you wanted cash, you could always sell it and you could realize the cash as and when you wanted. Within 2 days, you would have the sale proceeds in your bank account. But in alternative investing, you are investing in something which is of greater risk. It is not liquid, unlike the stock market. So you can't have your money when you want, and you have to stay invested and you have to take a risk for a much longer period of time. So it is fundamentally an illiquid asset class as we see. Why should you be interested in alternative investing? So there is a bunch of terminology that will come and hit you, but we can simplify that very easily. So we've all heard of venture capital, private equity, angel investing, seed investing, all of that. So I'll come on to that in a moment. But essentially, all of this is risk capital. And founders, everyone from, let's say, Elon Musk, Steve Jobs, Sunil Mittal of Airtel, all of these guys have been funded by venture capital or private equity. And that is why they were even able to scale up their companies. So to give you more examples, the whole lifestyle that we know, the bunch of us talking to you here are Generation X, mostly born in the 60s. Generation Z, which is most of the young audience, really our lifestyles wouldn't exist without VC funding. So think of Instagram, the founder is a guy called Kevin Nystrom, he got VC funding. Jack Dorsey of Twitter, Nykaa, Koo, Flipkart, Byju's, all of these companies wouldn't exist, had it not been for alternative investing. So at a very basic level, today's lifestyles, as well as huge amount of social impact, job creation, technology, all of this has been made possible, because of alternative investing and alternative capital. This includes even the vaccines that we get for COVID, the BioNTech Pfizer vaccine or the Moderna vaccine. Most of the vaccines that we see have, in the early stages, been venture funded, as is the case with several, life-saving drugs that all of us take. So today, the impact of private capital or alternative investing is ubiquitous. Everything from the time that you wake up, from your alarm, your Fitbit, your telecom provider, your broadband provider, your groceries, your Uber, your electric bike, what you do in office, all of this is really literally possible because of private capital. And this is the sole reason why all of you should be interested in it, literally because it has changed the world. Just to tell you how big this is, in the US, last year, 1.2 trillion, or about 5% of their GDP, got invested in private equity and venture capital. In India, it was about $80 billion, which is about 2.5% of our GDP. And what is relevant and what is most exciting for all of us is that India is one of the hottest destinations today in the world for receiving private equity and private capital. There are over 110,000 startups, and every year 10 to 20,000 startups are being added. So just to pause there and talk to you about where does the money come from. The money really comes from one source is high net worth individuals and private family offices who are very wealthy. The other source is institutional, which is big banks, insurance companies, pension funds, governments. So these are the other source. But everyone in these categories, if they are, investing, let's say, 60-80% of their money in fixed income, which is safe, they would invest maybe 15 or 20% in listed equities, in stocks, and they would kind of invest 10 to 15% in private equity or venture capital. So to further give you some idea of the roles, a seed investor or an angel investor is kind of the guy who gives an enterprise its earliest capital to grow. So everyone from Steve Jobs to Elon Musk has been funded by a seed or angel investor, and these could be formal. This could also be informal, like friends and family. Then a venture capitalist or a venture capital firm is when they invest. That's the first sign of institutional interest in a company, and they write a larger check, and these companies use the money to grow larger, to build a product, to market it, to hire more people. So that's where really the money is spent. And moving forward in the cycle, there is private equity, which is mid-market, growth investing. So once your company has grown to a certain size, you want to go to the next step. That's when you raise money from private equity firms. And lastly, many growing enterprises are also these days acquired by private equity firms. So many companies that we know, like let's say Star Health Insurance or Kim's Hospital in Trivandrum, for example, or Max Hospital Group, all of these are actually owned. The majority owners of these companies are all private equity firms. So that's the control stake or buyout kind of investing, where the investor is the actual owner. So the semantics are not important. We can call everything private equity or venture capital. Now, why should you be interested in this profession? Mainly because it is your generation that is changing the world. People like me are actually investing with founders and CEOs who are literally half our age. So by the time some of you are in your mid-20s, late 20s, mid-30s, the chances are that many more of you will become entrepreneurs. Some of you, will join so many other professions. But the reason you want to be interested is that you can be a part of this life-changing story. And there's a whole cultural shift today in India and around the world. It's no longer about getting that government job or getting that job with a big MNC, which is what many of us aspired for. And many people become entrepreneurs, and the VCs who fund these entrepreneurs are, they're the guys with the best view and the best contribution to these companies which are changing the world sort of one at a time. What are the skills you need? You need excellent analysis and financial skills. You need superb people skills. You need great communication skills. And you need to apply everything that you learn to the world of business. And you need to absorb and relearn. And every new day is an opportunity to learn more and learn from your mistakes as well. So you can get into this profession. About half the people enter it as analysts, similar to what Anish mentioned and Sundar mentioned. So you can do a CA or an MBA, or you could have even done your engineering, but you have a finance and business orientation. So you get recruited through your campus, or you apply directly. And about the other half really is through direct hiring or network-based hiring. So to kind of conclude, what skills do you need to kind of stay in the business? To put it in a lighter vein, you need the all-round skills of a Mahendra Dhoni. You need the dedication of a Roger Federer, and you need the negotiating skills of a crying baby, which always gets its milk. So the future is closer than you think, and young people are changing the world, and the world of alternative investing or private equity or venture capital is where you have the best ringside seat to all of these changes happening in the world. So I'll conclude with that and hand it back to Anish. Anish?
Yes, thank you. And ladies and gentlemen, I can assure you that Srini has all those skills that he listed out. So with that, let me hand it over to Shekhar. Shekhar, you're on mute.
Thank you, Anish. Binoy, can I have the slides, please? So I'm going to talk about banking and how an exciting career banking is. So to start off, I think just to give you an overview of the banking industry. So this is a $6 trillion industry globally. And as Anish mentioned, this is part of the larger financial services industry, which is about 22 trillion, and that makes up about a quarter of the world's economy. So banking is a truly global industry. US, Europe, and China making up a quarter each, roughly, in terms of revenues, and the rest split between other geographies, which are so overall industry is it's a mature industry. It's been around for a long time, and overall it's growing, in the low single digits. But some markets and segments are growing fast. So if you look at markets like China or India or the Middle East, these segments are growing fast, especially in places where financial inclusion is still low. These areas, there's a tremendous growth opportunity still left, because financial inclusion in most markets are still around 50-60%, leaving a big opportunity for growth for this industry. So what makes up a bank? So a typical universal bank comprises different sections. So the one that most of us are familiar with is retail banking or consumer banking, and that's really banking for individuals. So this is what typically most of us interact in a bank. When you go and open an account, obtain a credit card, take a loan, or any of these products. And retail banking is normally around 30 to 40% of revenues of a bank, and this really connects with all the individuals. And this division handles all banking for individual customers. Now this is really a pyramid. So there are different type of individuals with different needs. Some people need home loans. A lot of us need credit cards, accounts. So this division takes care of different products, different segments of customers, and so on. The top of the pyramid is really where you have private banking, which is really taking care of banking for high net worth customers, typically who have investable surplus, which can really they have different needs in terms of wealth management and so on. The third area is corporate banking, which takes care of banking for companies. So this can be small and medium enterprises, SMEs, or it can be large corporates. Fourth is investment banking, which takes care of wealth management, advisory, M&As, and so on. Treasury services, which typically takes care of FX products or interest-related products and others. So all these makes up a bank, and there are opportunities to get engaged and work with any of these parts of a bank. So about half of business of banks come from what is called balance sheet products. So typically accounts, loans, credit cards, and so on. And the other half is really from products such as payments. When you make a payment, when you send money to somebody, or when you use your card to buy things from a shop or online. The banks earn transaction fees. There are also revenues made from advisory products and others. But typically, this is what constitutes a bank. Can I have the next slide, Debna? So what are the career opportunities in banking? So as we saw, the jobs in banking can cover a wide variety of areas. So banking itself is an industry, and it requires a very wide set of roles, skills, and competencies, which is why it's quite a varied and diverse kind of career. So it can start with, for example, careers in customer service, where you typically work in a branch, or in distribution. You work in call centers. When you talk to people, you manage call centers. You either take the calls, run the call centers, and so on. So the entire customer service piece is a very large part of banking itself. Then you have sales and relationship management. So you could handle clients, manage their finances, manage their banking. Sales is an important aspect, where you deliver products such as loans, you open accounts. So this is again a large arm of banking. Then you have the product development function, which is more like the factory. So this is where banks typically make products. So it is how they put together, packages, or a new loan product, or a new credit card, and so on. So this is an exciting place where a lot of innovation happens, a lot of thinking happens, and you come out. Marketing is involved, because you need to develop these products to the right target segment. You need to market it correctly. You need to have research. You need to test. So the whole function kind of sits together, and make sure that the right products are prepared and handed over to the right segment of customers. Then you have finance and accounting, which take care of course, all the accounting, but also the finance side of the bank, in terms of managing the balance sheets, capital, managing the risk, and so on. Then you have technology, which is a very important aspect for banks, increasingly so, as I will cover shortly, because technology is really changing banking, and this is really bringing in a lot of changes and advances in this whole industry. So technology is kind of becoming the heart of banking, and in fact, a lot of finance companies or banks have said that they're actually tech companies first and then banks, because that's how banking is changing. And that's really becoming a very, very critical function for banks. You have operations, which really ensures that your payments are done, your transfers are taken care of, your credit cards work. So this is really the the boiler room. If this doesn't work, banking kind of collapses. And there's a lot of infrastructure, a lot of effort which goes in terms of systems, policies, procedures, which make sure that the entire banking industry works globally 24/7. You have risk management, which takes care of things like credit risk. So when a loan is given out, how it's managed, is given out to the right persons, what evaluations are done, the loan is collected back correctly. Compliance is what was mentioned. So compliance and KYC, or anti-money laundering policies, are extremely important in today's world. So compliance and regulatory risk management is a very important function. Then you look at operational risk, you look at fraud risk. So risk management is itself a very big area, which is critical for banks to manage it correctly. Because at the end of the day, banks really manage a lot of risks. They manage interest rate risk. So they borrow from, they really borrow or take money from customers, and they lend, to other customers. And that's where you typically make your spread. But there you need to manage your tenors, you need to manage your risk. So risk management essentially is what a lot of banks do very successfully. And that's really at the heart of how banks make money. Then, of course, you have a lot of other areas like human resources, or strategy, or governance, and so on. So as you can see, banking itself is a very wide canvas. It's got careers ranging from the entire spectrum of an organization. And each of these areas can actually offer exciting careers for all of you. And you can also move from areas to another. So I personally have done roles in many different areas of what is shown here. And as you do more roles, you get a better and better understanding. And each of it has got its own challenges and requirements, but it's a wide canvas, and the whole industry offers opportunities in each of this. And typically, what are the other entry points into banking? So we see, of course, people joining from commerce backgrounds, engineering backgrounds, arts or liberal arts, political science backgrounds. So there is really no preferred point there, but typically, if you look at, let's say, what are the large disciplines which attract, so people, so MBA qualification is increasingly, becoming a key entry point. A lot of MBA students join banks, and banks are attracting also a lot of MBA students because the skills required, if you see the jobs above, typically an MBA provides this. So whether it's marketing or understanding of finance or systems or customer service and so on, I think the MBA provides the right level of skills for that. CA, of course, continues to be an important entry point, but also entry points from social sciences. Whether you get into careers in HR, technology is a very important provider, and as I'll show in the next slide, because banking is changing and fields like technology, etc., are important feeders into the industry. And you can also join as a fresher, also mid-career. So you could have worked in a company in a marketing role and then moved into banking, or you could have worked in let's say, technology with a provider and then moved into banking. Can I have the next slide, please? So I just want to spend a minute on this. So banking, traditional banking is really being transformed. So over the last decade or so, banking is really being digitized and transformed rapidly. And this is really because of 3-4 things. One is advancing technology, where you can actually do banking now on your mobiles and so on. Customer demographics are changing. So there is the millennials and the Gen Zs who look at banking differently and who want more than basic banking from their bank. So they look at other services, lifestyle services, and so on. So changing customer demographics, rising expectations. So a lot of customers today expect from banks what they expect from a Google or an Amazon, right? So they want banks to be more personalized, to be frictionless, and so on. And of course, then you have the whole area of fintechs and even big techs who are entering banking. So all this has been transforming banking in the last decade. And today, customers look to carry out banking anytime. I mean, 20 years back, if you needed a loan, you had to go and meet your branch manager, sit with him. He will quiz you, and then you get a loan, but not anymore. Today, customers look to carrying out banking anytime, anywhere. So mobile online banking, ATM banking, chat bots to answer your queries, video banking, and so on, is really transforming the whole banking service. So about half of all current jobs in banking are expected to be automated in the near future. And this will be replaced by roles that require different skills. So what are the evolving roles that you see here? The roles that are really coming up are things like, for example, data scientists or customer experience and journey designers, AI, machine learning, robotics process specialists, app developers, technology experts, digital marketeers, wealth advisors, regulatory experts, and so on. So these are really the roles that are really coming in, because a lot of the regular transactional processes are being automated. And what is required is that the skills required for a banker are changing from basic cognitive skills to more related to technology and socio-emotional competencies. So we want bankers who are entrepreneurs, who can do solving of problems for customers, who can work in a very agile way. A lot of the development happens in banks, works in agile squads today, and who are able to then assist customers in solving problems, advising them in the right way, and so on. So the whole industry is changing, and employees really need to constantly learn, reskill themselves. So that's all I wanted to say at this stage. So just to summarize, it's a global career. It's a very exciting career, and personally, over the last 2.5 decades, I've really enjoyed it. These are transferable skills. You can the same skills work in most parts of the world. And as banking digitizes, is really becoming a global marketplace. So you have a digital bank in Singapore, which tomorrow can launch in Europe or the US, with the same level of platforms and skills. So it's an exciting field, and as I said, it's the skills required are changing, and that's really because of disruption that's happening, which we will hear more shortly. So with that, I'll hand it over back to Anish.
Thanks, Thanks, Shekhar. That was well done. Banking is a very vast field and very difficult to cover the way you have done. Thank you, Shekhar. So now we'll move on to Sagar, who will talk about fintech.
Hey, thanks, Anish. Hello, everyone. Binoy, if you can just bring up the two slides. So Shekhar had kind of introduced the whole digital transformation of banking. And what I will do in the next 2 to 3 minutes is to give you a trailer view of what that looks like from a fintech perspective. But you must all be wondering, what is fintech? Fintech is a very young industry, but growing in leaps and bounds. And it was a term coined to describe the software industry's explosive attempt at using technology to enhance financial services and products. So if you have heard about terms such as mobile payments, peer-to-peer lending or online lending, crypto wallets, I'm sure, algorithmic trading, which means ability to execute complex trading mechanics using software code, or even personal investment apps that are pretty much up around any mobile solution that you have. These are all examples of fintech solutions, and some of the company names would definitely resonate for most of you, such as our favorite Paytm, Stripe for payments, Revolut as a digital banking offering, and then Coinbase, of course, for crypto and so on. So these are all examples of recently growing and albeit exponentially growing examples of fintech companies who are disruptors within the banking and the financial institution space. But one needs to ask the question, why is it relevant, right? I mean, tech has been around at banks and financial services for more than 4 decades. But why is it becoming more relevant today? So let's look at it first from the demand perspective, and let's understand why this change is creating this very exciting sub-industry on financial services. As population continues to increase, more than half of the global population is still under or unbanked, which means they do not have access to basic financial services. And that's a sizable growing population, right? Or a sizable market to consider globally. The second is those who have been the forebearers of providing the banking solution, which includes banks and financial institutions, have been traditionally technology laggards, which means they have been very slow at adopting technology needed to fast track. Because if you look at every other adjacent industry, which includes media, entertainment, e-commerce, and so on, right? They have been moving in leaps and bounds thanks to tech. But what about banks and financial institutions? So what happened? Just about a decade plus ago, a few firms started to ask the big David versus Goliath question, which is an outrageous question to say, hey, we need banking services, securing deposits, borrowing, payments, investments, whatever, right? But do we really need banks that do not offer the service and the solution at the price point at which we want, which makes it more accessible? So what if software, which was disrupting every other sector I just mentioned, can be utilized to provide better banking services? Can software be taught to perform banking services? So if you take an example like Paytm, imagine how they began, right? India's consumers were having access or penetration of mobile phones was extremely high. And they were all struggling with prepaid mobile top-ups. So previously customers had to wait at the store or go to a recharge location, buy a top-up card, struggle with their extraordinary long password and all that good stuff. But what Paytm understood is, if I can penetrate this market with a simpler service to top up their accounts instantly on their phones, that gives me access to a huge market, billion market for providing better solutions and services for simple transactions such as recharge. Once they fixed that, then they went into other areas, which included fixing domestic payment transactions, especially transactions for the small and medium, merchants and service providers, right? And then now, as you can see, they're slowly navigating to become a super app, and backed by the regulator, they are now becoming a digital banking service. So long story short, if you look at what the promise of fintech is the disruptive force of lowering the costs while increasing the access to the end consumer for convenient banking and finance. This is tremendously been accelerated, and that's why this relevance is very important now, because of emerging technologies, some of them which have been previously mentioned, like machine learning, blockchain, digital assets, quantum computing. All of them are accelerating the focus and investments in the fintech area. And the plus side of that is the regulators also taking a positive stance, which is the storyline globally. And in fact, in fact, regulatory jurisdictions are competing amongst each other. Singapore with UK, UK with New York, US, and so on and so forth. So to find out how they can further establish a solid base of digital banking solutions in their country. So this is why it's becoming relevant, right? Now let's move to the next slide to understand what are some of the opportunities you can expect, right? It's a very, it's as I said, it's a very advancing and growing field, but broadly there are three types of roles. Product or commercial led roles where you need a deep understanding of any specific financial product or service area, which I think most of the other panelists have covered. For example, commercial lending, investment products, payments, and so on and so forth, or of specific clients and market areas. So these roles allow you to still sit within the fintech company, but manage the processes to digitize that front end facing of it, or digitize the product. Then you have operational roles that Shekhar had also highlighted, which needs an understanding of financial operations, which includes risk management, compliance, legal, dealing with regulators, and so on. And this is where most of the hiring is essentially happening within the fintech, apart from the software or the technology and the product development roles, which is the third one. So as you can expect, the technology and product development roles link to software engineers, IT architects, project managers, data scientists, as we progress around the emerging tech kind of space. And let me give you a quick cue as to how to start thinking about preparing for some of these roles within fintech. There are many paths which are dependent on skills and background. There is obviously a commercial path where you have a very strong skill set of grounding yourself in some sort of engineering degree, and then getting your MBA, finding the business development opportunities to understand or get a firmer grip on clients, products, markets, and so on. Gain that experience there, and then move over to a fintech to do similar roles within the fintech. The other classic path is technology path, where you get a bachelor's degree and a master's specialization, so to speak, in any engineering discipline, primarily software development, and then build that expertise as you work through the fintech roles that you will get. Most importantly, I would not put it in stone and say that there are only two paths. Like Shekhar and all the others have highlighted, this is a very growing, it's a growing industry and worth observing as well. There are multiple paths that can get you there. The only quick pointer I would give you is to start reading up on fintech and in economic or any other media channels that you can get a flavor, right? And also observe that there are not just a single path. In the future, many more specialist paths would also be created. That was kind of a trailer view. We will cover more aspects of this as we progress through the conversation. Back to you, Anish.
Thank you, Sagar.
Next, we have a question for Srini Chetan. You had a wonderful talk regarding private equity investments earlier in this session. And my question to you is, what are the positives and negatives of this career? I think most of the participants, and me including, would like to know this answer.
Yeah, thank you, Gautam. The positives are that it gives you a chance to apply most of the skills that you learn, whether it is analysis, whether it is negotiating with people, communicating with people. You have to influence the course of companies, so it gives you a lot of learning as well as input in that direction. Big payoff again is the kind of impact that you can create over a period of time. So, like I said, there can be enterprises which you funded, which will create a huge amount of jobs, make a meaningful social impact, make a difference to the community, etc. So all of that, I think, is extremely fulfilling. The challenges, and I wouldn't call them the cons, but the challenges really are that, one, you need to be very clear about prioritizing your time and overload. You need to be extremely focused in terms of what is the outcome that you want, and of course long hours, maybe lots of travel, maybe dealing with difficult personalities. So all of these are also part of the game. But like a chess computer, you have to make mistakes. So you make mistakes, learn from them, and hopefully you don't make that mistake again.
Thank you, Srinivas. Now moving on to Sagar Chetan. You had a wonderful talk about fintech, and as it is a budding industry, and for most of us it is a new one. It would be a great thing if you could explain the pros and cons of this career.
Sure. So let me begin, right? I think my panelists would definitely agree that this is by far the most fun side of financial services sector to be in right now. Look, number one, it is at the cutting edge of tech and many interrelated fields. So let me give you an example. My team here, based out of Singapore, is actually working with human behavioral science experts and creating what we call as AI models for predicting when loan applicants will default at the time of securing a loan. That just doesn't require software development expertise. It requires data science. It requires a lot of understanding about human behavioral expectations. How do you model that and get to the final outcome? So this is very cross section of fields and interdisciplinary to drive some of the solutions we want at the cutting edge. So that's the exciting bit. Likewise, I was also fortunate to be part of teams, the kind of setup like innovation centers or labs funded by the government as well as the banks, for the banks such as Citi, UBS, and so on. So banks are also firstly, they were against all this fintech. They considered fintech as challengers, but now they have become like co-conspirators or collaborators, lack of a better word. So it's changing. So being at the cutting edge and also learning through that process, because the learning runway is a lot, as you can imagine. The field is vast and constantly becoming advanced by the day. So there's always something to look forward to as you wake up every day. So that's the exciting bit. And last but not least, I think personally for me, there's also a mission tone to this. What do I mean by that? See, in certain cases, fintech is trying to solve some of the hardest problems that traditional banking hasn't done, which is how do we provide access to the most vulnerable and economically displaced with basic financial solutions, which becomes a huge economic opportunity, right? And there is a lot of dignity in that. So I think these are some of the the benefits or pluses of working on the fintech side. But let's look at the other part. The sad part is it's a young industry, so also it's very competitive, which means for every one successful fintech, there's definitely at least a 500 other outright failures. So there's always pressure to learn as well as perform, and there's a lot of stress that comes with that. So it's not for the faint-hearted. And you never know. I just got a question around crypto, right? But I don't know about this, but I also do wonder if all this fintech excitement could be the starting point of the next economic crisis. I don't know. But these are the other cons of being part of this industry, which only time will tell. But certainly a very exciting and a learning prospect industry, so to speak. Thank you.
Thank you, Sagar Chada, for educating us on the pros and cons of fintech. Next, and as we have a general idea of what each profession entails, I have a question for Srinivas Chidambaram. And as you have had a previous career in chartered accountancy and now in finance, how has that helped you in your finance career? And what are the higher studies required for a career in finance?
Sure. Thank you, Gautam. And Binoy, if you could put up that slide as well. So just to give you a background, an education in as a chartered accountant is a gateway. So it is a means of entering any kind of specialization or any kind of versatile career as you go along. So it prepares you for all aspects of business. It prepares you to be a manager as well as an entrepreneur or a specialist in finance. So just to give you some flavor, some of the prominent personalities that we can think about. Rakesh Jhunjhunwala, who's an ace investor on the Indian stock exchanges, is a chartered accountant. Kumar Mangalam Birla, who's the head of the Birla Group, is a CA. Similarly, Deepak Parekh of HDFC, Piyush Goyal, who's our Commerce Minister. So all of these people, and we even have Karan Bilimoria, who studied in Loyola when he was in junior school, who was an entrepreneur and owns Cobra beer in the UK, which is very popular. So so it gives you the grounding. Now, just to spend maybe a minute on, how do you get into this profession, and what do you need to do. So you can enter the profession after your graduation, or you can enter the profession just after your 12th standard. So if it is after the 12th standard, you write a common proficiency test, and after that, you can appear at your second level test, which is called the IPCC. And if you qualify your group 1 there, you can begin your period of 3-year practical training or apprenticeship, which is called the articleship. You can do the same thing without writing the common proficiency test after you've finished your graduation. So you can be a commerce graduate, or you can be any other graduate. So there are no restrictions from that point of view. Now, typically the IPCC and the final exam, if you get through all your exams in the first shot, it'll take you about 3 years to complete. And after you complete, you can also look at other areas of greater specializations, which are like adjacencies. You can study law, you can do your MBA, you can do your cost accounting, you can do a CFA, which is a Chartered Financial Analyst diploma, which finds particular use in the investing world. So all of these are, additional adjuncts which you can follow on to your CA with. You get a range of career options. You can join industry in accounting or finance. You can get into financial services, as we all spoke about earlier. Literally, there is a ton of stuff to do. You can be a tax expert. If you are a tax expert, for example, you can be a specialist. You can keep working. You can practice, till there's no retirement, effectively. So all of these avenues are open. So when you want to decide, is this for you, I think you should think about what really interests you, and what really interests you is by kind of doing something experiential. You should talk to people who are in practice. You should talk to bankers. You should talk to fintech people. You should talk to investors. So all of these people, who hopefully we've conveyed a sense of what we all do in terms of a day job. But you should get an experiential sort of exposure by literally talking to people and observing them, and that will hopefully spark off your interest. For example, for me it was economics, and I actually in my 11th and 12th standard took up the science and math stream because all my friends were doing that, and then I switched because I figured it was not for me, and I should really go back to my sort of basic interest in economics and business. So that's a quick summary. So let me hand it back to you, Anish and Gautam.
Sure. Thanks, Srini. That's very informative. Shekhar, if we can come to you, you have had a very interesting academic career, having done your engineering from IIT Chennai, and then your MBA from IIM Ahmedabad, and then got into, as you mentioned, the FMCG sector, tried out entrepreneurship, and then finally landed in finance. So can you just talk through us, how difficult was this journey in terms of, starting off with a non-financial background and then getting into finance, and then, what made you choose finance eventually, maybe,
Sure.
because of time, we can keep it short,
Yeah, I will. Yeah. So yeah, I did start with engineering, and then actually went on to do my MBA. As my first job, I specialized in marketing and finance. So based on my focus on marketing, I actually joined the FMCG sector, and that was really my first job where I spent a few years. I did then start a small company of my own, and a few years down the line, then I actually worked a bit also in the durables industry before moving into finance. So what really made this transition, Anish, is that at core, I really was a marketeer. So that is really my core specialization, and that's what And in the 90s, when banking really started expanding in India and other parts of the world, it started attracting people from different disciplines, right? And so I moved into consumer banking, which really revolves around, at that time was really working around a lot of sales and marketing kind of skills, because essentially it was, financial inclusion was growing, and banks were trying to reach out with new products, new services to customers. And that's one thing. One thing I've seen about banking is that it's not really, working with one kind of specialization or service. It really absorbs people from different industries. So at that time, you saw a lot of marketeers who joined. Finance has always been a strong. So MBA has always been a strong, feeder into marketing, into banking, because finance typically, which involves, balance sheet analysis, capital management, is core to what corporate banking does, right? So different skills of MBA are used into banking, and I think that's why MBA continues to be a big feeder into banking even today, because it's really an industry which requires pretty much all the skills that banks require, whether it's corporate banking, finance, or marketing, or organizational behavior, or technology, and so on. And one quick touch on engineering to finance. I think the relevance of how an engineer to finance is. Engineering, I think, teaches you essentially a lot of quant skills. Teach you analytical reasoning, structured thinking. And I think these are very useful in banking. And recently, over the last few years, as digitization happening, we see even more engineer graduates entering banking, because areas like data analytics or digitization and technology, these really require a lot of engineering kind of backgrounds. So I think we see a lot of more engineers coming, closer straight into banking. If you have a postgrad qualification like an MBA, it helps. But otherwise, we also see people entering in from other functions as well. So.
Sure. Thanks for that, Shekhar.
And now moving on, I have a question for Saga Chatan. Could you talk to us about the blissful days you had in Loyola?
Okay, good question, Gautam. Just to set the context here, again, I was fortunate to have all my schooling, 13 years at the school. Okay, so it's very important for the audience to know that, because നമ്മുടെ ഭാഷയെ പറഞ്ഞാൽ എനിക്ക് ലോയല ഒരു സ്കൂൾ അല്ല, ഒരു വികാരമാണ്. Okay, so apologies for going native. I'm sure most of my panelists would relate to that. Look, among the infinite experiences Loyola has gifted me, the best one to share, I should say, is related to extracurricular. And let me pick my personal experience, basketball. Playing for the school team, and I should say winning the Loyola Cup was our class's entire only dream. Okay. And this was all that we cared about, and I don't know what all we have done or we did at that point in time to secure that, but those days it was very tough, because our arch enemy, those, I think the previous years to that it was St. Thomas, but it used to be St. Joseph's. Okay, and they troubled us every year, as you can imagine, every single year. And it took us 4 years. Okay, so 4 years of hard work, trainings, getting good coaches, playing multiple tournaments, losing a ton of games. Okay, to regain the Loyola Cup in my final year in 12th standard. And that's a memory I'll always cherish, and I'm sure all my classmates as well. Why is this relevant again? Because this extracurricular, right? I mean, those 4 years that Loyola supported me to fight, to not give up, to face all sorts of challenges, be it academic, non-academic, all of that still lives with me today. And I'm not mincing words here, because everyone from our dear father principal, then father vice principal, teaching staff and non-teaching staff would support us like 100%. And these extracurricular, non-academic and leadership experience exposure was, I think, the key differentiator for me, right? And this is one of the most blissful experiences, Gautam, that I still carry with me. And I still remember those days when our math teacher, Saraswati ma'am would specifically come and talk to me, and she'll say, "You go and play that match. Okay, we'll figure out a way when I can, help you with extra classes and whatnot." Right. At the same time, Joe's uncle, our non-teaching staff, we would handle the sports room. He would keep one of the most favorite, lucky basketballs for our team to practice at any given point in time. And last but not least, I still remember my dad was so vexed with me spending so much of time on the basketball court that he actually made a trip to Father Principal's office very early days when it was their Father Philip Dial around my 8th grade or 9th grade, I think. And he had a talk with him, and interestingly, Father Philip Dial's response was, "Leave this boy alone." The amount of confidence I had in that simple reaction has pretty much given me all the confidence that has led me to take some of the riskiest decisions I have in my career choices as well. So hats off to Loyola. And these are some of my great experiences, other than the kind of a second family, as I said, what Loyola means to me. Sorry, that was an emotional answer, but I thought I should share it with you.
Thank you, Sagar Chada, for sharing some of the wonderful memories you had back in Loyola. And now moving on, Sundar Chata, I think you had a wonderful time in Loyola back then. Can you recollect some of it?
And absolutely. I mean, as Sagar mentioned, I too spent 13 years at Morgan Stanley in Loyola, so it was absolutely fantastic. I thought, rather than pick one experience, I thought I'll share some thoughts which the group might also find it relevant. As you sort of go through these classes up to your 12th, many a times you sort of are facing multiple questions. When you have multiple choices, you face questions, right? You have run through your head. Should I go through CBSE? Should I go to SSLC, ICSE? Which group should I take? And to me, it was no different, right? I think I probably changed everything 4 times over. None of those had any logic to it. You speak to a different person, everyone gives you a different answer, right? But all I want to sort of share with you is, do your analysis, but go with the choice which you make. Frankly, a lot of these things are beyond that. What the school teaches you is going to help you way down the career. Whichever path you choose, I think that every Loyalite has it inbuilt in him to make a successful career ahead. So don't worry too much about whether a choice you have made is right, wrong, should I have done differently or anything. It's all going to work out really well because you are groomed to become successful.
Well put, very well put, Sundar. One topic in finance that we all deal with is where should you work? Is that really important? Sundar, you're working in the financial capital of India, Mumbai. Do you think it is essential if one is starting off a career in finance to be based in Mumbai?
Yeah, so I think the way I would put it is it helps to be in Mumbai. Things are changing. When I started the career, it helped to be in Mumbai. It also depends on the industry, right? For example, if it's in the fintech industry, Bangalore or some of the other locations. But if it's sort of core investment banking or private equity, what tends to happen is most of the firms tend to be sort of headquartered in Mumbai, and that's just for historical reasons. But one thing, you should be prepared for is, the job entails a lot of travel. So morning, evening trips, it sort of tends to happen a lot. The way I would put it is, if you are a global firm, it makes sense to be in New York, Hong Kong, London, right? It's sort of similar to that. Bombay has also sort of got that thing to it. Now, what you're seeing is in the last 2-3 years, things are changing with Bangalore emerging. There are firms which are sort of setting shop in Bangalore. With fintech emerging, people are sort of setting shop there. But if it's core finance, I think the initial days of your career, more than your choice, I think the job tends to actually be in Mumbai.
Sure. Thank you for that, Sundar. Gautam, maybe we can move on now to the next one.
Okay, thank you. And it's been a wonderful session so far. And in addition to that, I will ask Shekhar Chetan to give me some practical pointers that my classmates can use for preparing for the future.
I think in interest of time, we can just leave it at one point for everybody.
Yeah, sure. I mean, the only point I would like to say, especially in finance, as you have seen, it's a very vast field and it's changing a lot, right? There is fintech, big techs are coming in. You have people like the Googles and Amazons who are already into finance. So it's a very fast changing field. And I remember when in my early days, my teachers used to say that we need to develop our proficiency. It's like a tea, you build an expertise in one area, which is your specialization, but then you develop your perspectives, like a tea. So let's say you want to build your specialization in CA, but also learn about economics or humanities, or if it's engineering, learn about adjacent topics. So build your perspective, be flexible, and as I think Sundar or Saga mentioned, at the end of the day, things are changing rapidly, and there's no one best career, right? It's a career that is best for us. So we have our own inclinations, our own competencies, and our expectations. So you need to find the place that is a sweet spot for each one of you, and I'm sure you'll find it. So that's what I really wanted to say. Yeah.
Thank you, Shekhar Cheta. Now moving on to Srini Cheta.
Yeah, I'll keep it very, very quick. There is a slide with some suggestions also, which I had put in. So from an experiential point of view, I think all of you, I would encourage all of you to, spend some time on some of the websites which I have mentioned there. The NVCA is the National Venture Capital Association of America. IVCA is Indian Venture Capital Association. ICAI is Chartered Accountants website. So some of these things have huge amounts of information. Now in the age of internet, everything is available online. So you can actually click through some of these websites and even go to YouTube videos. So that will give you a taste of all of this. On a more entertaining note, if you see the movie, if you see the serial, which is Silicon Valley, it'll give you a humorous exposition to all about startups. But that's the kind of flavor that you need to spark your interest. And those of you who read some nonfiction, you should try out some of these things. There are other stuff. There are other things also. The birth of Netflix, for example, is a wonderful story, and you will be riveted if you start reading it. So so as Shekhar said, you should keep an open mind, have some kind of experiential touch and feel, and then decide what you want to do and whether this fits in with your inclinations. Back to you, Gautam.
Thank you, Srini Cheta. Now moving on to Sundar Cheta.
Yeah, I mean, I would just add to say, I mean, whatever interests you, keep track of the latest developments. I mean, follow the newspaper or magazine, keep track of it. I mean, what you need to learn in terms of core finance, etc. I think your careers would take there, but keep abreast of the latest development. Make it a habit to read.
Okay, thank you. Now moving on to Saga Cheta.
Right. So number one, please get acquainted with this industry as much as you can. Read up, meet up with more people, please, in the fintech space. Understand what the skills are needed through those conversations and see if you're interested. I think that's the most relevant part. Last but not least, if and when you get a chance, volunteer and intern if possible, especially those who are interested in technical side of things. I see questions on crypto and blockchain and all that. So interning and volunteering and trying it out for yourself would be, and there are so many open source GitHubs that you will have access to. Please trial it out to see how whether you're interested in pursuing this path or not. Again, as I said, this is just a trailer. Those who need further pointers, you have my coordinates from the panelists. Please feel free to reach out to me on specific areas and I'll be very happy to help. Thank you.
Thank you, Sagar Chata. Now moving on to Anish.
Sure. I have only one suggestion, which is, start investing as soon as you can. Uh, in India, you can open your own broking account when you hit the age of 18. So please do start investing from that age onwards, because forget about the career in finance. It's a life skill which you can develop from a very early age, and you will definitely find it interesting. So that is my suggestion. Thank you. So we can now take on questions. From what I see, there is one question which is there on crypto. Maybe, Shekhar, you can answer this. This whether, crypto will
Yeah.
make banking system irrelevant in the future.
Yeah.
We must obviously point out that crypto is deemed illegal in India at this
Yeah.
point in time.
Yeah. So, crypto, of course, has been, making waves for the last few years, increasingly so. It's very different kind of, it's a very decentralized system of operation, right? And the uses of crypto are very many. So the application of the whole area of blockchain into finance is what has really, produced this new wave. Definitely, it's it's disrupting the world of finance. There's no doubt about it. It started almost, the whole blockchain started 7-8 years back, and crypto has been in the news for the last 4 or 5 years, and it's still evolving a lot. So essentially, finance, the whole world of finance is being disrupted, as I said. So it could be an Amazon, getting into finance, or Google getting into finance. So there are different levels of the waves of disruption happening. And I think crypto is another one, right? So definitely it's an exciting new thing that's happening. However, it's very much in early stages. There are a lot of questions which central banks have. There's a lot of questions on regulations. How do you really, ensure compliance operations? It's used for the right purposes. How do you put checks and breaks around it so that it is used correctly, and so on? So, I think we should see crypto as another level of disruption that's happening in the market. As a fintech, as a big tech, is going to happen. And I think that's the I would say the magic of the world of finance. There's a lot of disruptions that keep coming in. And finance will absorb these, evolve, and then get into something better, ultimately for the market. So it's an exciting field. Let's keep watching it and see what happens. But finance, I think, encompasses this and goes beyond. So look at the larger picture. That's what I would say.
Thanks, Shekhar. We have no other questions. So, Gautam, maybe we can propose a vote of thanks.
Thank you, Anishada. So moving on, respected dignitaries and dear friends, I do hope that the 11th session of LOBA Finance Career Guidance session has ignited the spark in you. Let me move on with the tasks that I have been assigned. I'm here to propose a vote of thanks. We had some wonderful people with us today to share their experiences, and I'm sure their experience matters a lot. On behalf of Loyola School and LOBA, I would like to extend a hearty vote of thanks to our panelists, Sri Shekhar Krishnamurthy, Sri Srinivas Chidambaram, Sri Sundareswaran, Sri Vidyasagar Shenoi, and also to the moderator, Sri Anish Mathew, who spread their valuable time from their busiest schedule to share their experiences with us. Gentlemen, today we had an opportunity to hear your thoughts, and this will surely encourage us in our future. Thank you. I would also like to thank Shruti Madam for sending us a question from the students, Mr. James Thomas for putting us in lens, Vinay Stephen for technical support, and Philip Matthew for all the communication and promotion, along with our teachers, students, and well-wishers for the active involvement and participation. Thank you all.
Thank you, Gautam. So we have now reached the end of the session. One announcement: the next career guidance session is going to be on law. So with that, we come to a close for this session. Thank you, everybody. Good night.